Hello everyone, I am Pratap here. We are at lesson 29.2.2. So in this lesson we are going to discuss about a daily income trade, performance evaluation and also expiry period of software generated demand and supply zones for daily income trades. Especially the second point is very important. Because every day we are generating software generated supply demand zones. How long they are valid? When is going to be the expiry period for those zones? These are the questions many of us might be getting. So you will get answers to these questions because we have very good examples from the previously generated supply demand zone reports. So last week we have discussed about the analysis of daily income trade generated reports. Now we have completed a week. So what happened to those zones during this last 1 week? Did we get any trades? Are there any successful trades? Are there any stopped out trades? Are there any supply demand zones which are not valid for considering the trades? These kind of points we should understand. Then only your trade plans will be very effective. So let's focus on that. And before that, please understand, if this is your first visit, you should complete the earlier lessons, and we are providing complete free training. Some of you might be knowing the cost of the training is over 8,000 US dollars. And all the training lessons are available at our NeoStock YouTube channel. At our channel homepage, click on the tab Posts. Some of you might be seeing the tab Community. Then you get access to this post. This post is having a YouTube playlist link. If you click on the link, we will get into Supply Demand Zone Price Action Course playlist. You can also get into the playlist, not only from post, you can also get into playlist. In the playlist, you are seeing Supply Demand Zone Price Action Course playlist. Here also you can click View, Full Playlist. You get access to all the training lessons because we are into Supply Demand Zone Price Action Course playlist. So you need to start your training from lesson 1.1, scroll down to the bottom of the page. Here, starting from lesson 1.1, I placed all the videos in an order. So please go through all these lessons one by one. But learn these video training lessons according to the training instructions I mentioned at our Telegram channel. I provided our Telegram channel link in this video description. So go to the Telegram channel. At the top of the window in the Telegram channel, you can find pinned messages. Click on that pinned messages. There you can find training instructions. So learn all these training lessons according to my training instructions. Then only you will become a very good independent trader. You will be in a position to analyze the charts effectively. Okay, now let's get into the zones identified by our software during the last weekend. We have discussed all these charts. The first one is Bharti Airtel. Because this is a DIT trade setup, daily income trade, you know the entry time frame is 15 minutes. Intermediate time frame is 75 minutes. There we calculate the trend. That is a very important ITF. And HTF is a daily time frame. And our software has taken care of all the concepts you learned in your phase 2 training course. Of course, phase 1 also. And then generated all these reports. And moreover, this 15 minutes entry time frame zone is overlapped with 75 minutes ITF time frame zone. And both together again overlapped with daily zone. That is what we have seen last week when we did our analysis. But during this week, is prices really entered in this zone? No. That means we did not get trade opportunity, right, in this zone? Yes. Suppose maybe the next trading session, if prices enter into this zone, can we take a trade? Is it still valid? This is the question most of you might be having. That's why I told you, understanding the expiry period of software generated these demand and supply zones are very, very important. Otherwise, blindly you will be taking the trades from these zones, and finally it may hit your stop loss. First of all, is it still valid? How long this zone will be valid? I repeat this question again. How long this zone will be valid? This zone will be valid, point number 1, as long as it is not stopped out. Is it stopped out? No. This zone is valid as long as it is a fresh zone. Is it a fresh zone? Yes. So is it valid? Okay, as per those points it is valid. And the third and most important point, is any new 75-minute zone is created. Let me put it in the technical words. Is there any newly created ITF zone? I repeat again. Is there any newly created ITF zone? Because it is a bullish trade setup, your ITF zone should be demand zone. That means, is there any newly created ITF demand zone? What is our ITF in daily income trade? In daily income trade, ITF is 75 minutes. For other income trades, you have different time frames. For example, if it is a weekly income trade, your ITF is a daily time frame. But now at present we are discussing about daily income trade. In the daily income trade, intermediate time frame is 75 minutes. So that means this zone is valid, our software zone is valid until when there is a newly created 75 minutes demand zone, until before the creation. It's not until before the creation of this zone. Once a newly created 75 minutes demand zone is available, then this is no more a valid. Why? I will explain. First, let us identify, is there any newly created 75 minute zone? Even before that, let me do one thing. Let me use the replay bar so that I can explain in an effective way. You understand in a much better way. When this zone was created, when we identified, our software identified this zone during the last week. Today we are at 15th February 2025 and we discussed it on 8th February 2025. So 8th February we generated our software report. We identified this stock. Okay. So when is the next trading session? Because see, the last candle is Friday, 7th February. 8th February, Saturday is a holiday. Okay. Friday we have the last candle, 15 minutes candle. But our interest is on the 15 minutes or 75 minutes? 75 minutes. Because 75 minutes, that is ITF time frame zone. Time frame identifies this zone's expiry period. Okay, let me go to the 75 minutes time frame. Okay. Is there any newly created 75 minute zone above this 75? No. This is only the recent 75 minutes demand zone. Maybe you have LOTL zone inside this. LOTL is okay. because it is within the zone. But completely outside, is there any new zone? No. Okay, now once market is started, when we are on February 25th, sorry, 7th February, 8th and 9th are holiday, Saturday, Sunday. 10th February, let's assume market is started. Once the market is started, what happened? Sorry. See, market is started. When? This is on 10th February. This is a drop candle. This drop candle is on Friday at 13 hours. Friday 14:15 candle, the last candle on Friday, we have a base candle. Next Monday 10th February, once the market is started, see the hidden body, you add the hidden body, this is going to be a rally candle with hidden body. You already land hidden zone and hidden body. So here, this is a hidden zone. This is a drop base rally in the dynamic view. You are all aware of dynamic views. So a rally candle is created with hidden body. Then immediately what happens? A new 75-minute zone is created here. This is a new 75-minute zone. Once a new 75-minute zone is confirmed, this is no more a valid zone. I repeat, whatever the zone identified is no more a valid zone for daily income trade. I am not saying this is valid or not valid for trading point of view. Trading point of view, it might be a valid zone based on some other concepts. But now I am talking about bullish and bearish trade setups point of view. Moreover, this is a bullish trade setup, daily income trade. For bullish trade setup, daily income trade, this is no more a valid zone. Why? You can ask a question, how can you say it is not valid? Okay, the reason is it got the expiry period. Now you can say, how can you say it got the expiry period? The reason is a new 75-minute zone is created. What's happened? Your bullish trade setup will be depending on this zone, not on this zone. Why not this zone? Suppose if this zone is violated, prices will be coming here. What will happen? Very simple. If this zone is violated, what will happen to the trend? Currently the trend is uptrend. That's why it is bullish trade setup. Which trend is uptrend? ITF. Because always we look into ITF time frame for finding the trend. Okay, because we are saying bullish trade setup, the ITF trend should be uptrend. Now the moment ITF trend is changed to sideways, the newly created zone violates, the trend will be changed to sideways. Once the trend is changed to sideways, what will happen? Next time when prices are reaching here, this is no more a bullish trade setup. Maybe it could be sideways setup, or maybe it could be a counter trend trade setup, or it may not be a valid setup at all. Any possibility is there. Definitely it is not a bullish trade setup. Bullish trade setup, ITF trend should always be uptrend, because a new 75 minutes demand zone is created. If this new 75 minutes demand zone is violated, the previously identified zones are no more valid. Okay, fine. Then how do we, I want to take a bullish trade setup in this Bharti Airtel, then how to proceed? Now you need to find zones, either in this zone or the above zone. Are there any 15-minute zones? That way you have to identify. Go to the 15 minutes time frame. So here you have a 15-minute zone is available. Let me draw the zone. This is the 15-minute zone, maybe a rally base rally with hidden body. If prices reach into this zone, I can plan my trade. Of course, we have to do other calculations like till your opposing zone RR is there or not. All those calculations you have to do. That we discussed in the previous lesson. Lesson 29.2.1 video. This is 29.2.2 video. But in the 29.2.1 video, we discussed all those points. How to prepare your trade plan, everything we discussed. But now you need to change from this zone to the newly created zone. Software also, maybe the next day when software, if you might have generated the software report, software might not have identified this stock. Maybe it might have identified this zone. Provide all the other factors. RR is available. Odd and enhanced scores are supported. Because software is considering all the factors. If it's satisfied with all the factors, then software will list. Otherwise, software don't display. Because it should have a zone achievement. If zone achievement is not there, say for example, it won't be displayed. Okay, but what happened to the market after that? Now let me go back to the 75 minutes time frame. Oh my God, making mistakes. Okay, the replay bar, instead of clicking on this, I am clicking on space bar. Okay, let me see, it gave an entry. Let us assume this is a valid zone. See, it gave you excellent profit from here to here. Till the 15-minute supply zone, rally base drop. And till here it reached, till the 75-minute supply zone. In between 15-minute supply zones might be there or may not be there. Let us check. First let me draw 75-minute supply zone. It gave an entry and prices reached up to 75-minute supply zone. But in between, are there any 15-minute supply zones? Let us see. No, there are no valid 15-minute supply zones in between. Yeah, there is one valid 15-minute supply zone here. But this is a pierced zone. Before prices reached, the supply zone is gone. It is already pierced. If pierced means next time prices easily will pass through this zone. That is what happened. So that means target point of view, you can keep pierced zone as a target, that is okay. But till 15 minutes, 75 minutes zone, you can aim the target now. Okay, how do you plan your trade risk point of view? Mostly you may go to type 2 proximal. Type 2 is tested, yes. Type 2 proximal also tested. Still, if you feel risk is more, maybe any fine-tuned zones you will plan, but many times fine-tuned zones you will be missing the trade. See, this is a classical example. In the 5-minute zone, you have a rally, 2 base candles, rally is there. This is a fine-tuned zone. Why we draw fine-tuned zones? Not for taking the trades. Fine-tuned zones, for the confirmation that institutional order flow is available in this zone. If it is an intraday trading, you will take your trade inside these 5-minute zones. But many times when trend is very strong, prices may not be reaching up to here. Mostly from the type 2 proximal of the zone, prices will reach and then it will be started moving up. That's why I have drawn the 15-minute zone up to type 2 proximal. But 5-minute zone, why we have drawn? To confirm this zone is having an institutional order flow. Do you remember the checklist? Last video we discussed. The checklist item is a fine-tuned 5-minute zone is not there. There are higher chances this zone will be violated. When you are having 80% probability for zone violation, do you want to take a trade in that? No, you will go for some other stock. But this zone is having an institutional order flow. So definitely we want to plan a trade here. And RR should be there till this 75-minute zone. Is it available? Let us check. If RR is not there, you won't take the trade. Minimum 1:3 RR should be there. So this is our entry. So this is our stop loss. This is our target. How much you have? 1:3.32 RR is there. Stop buffer, just roughly I kept this. Mostly it won't be beyond this. You got 1:3.32. Even if you feel their stop buffer is more also, still you have RR, sufficient RR. Suppose if you would have taken a profit, see, software listed on this, but we didn't take in the software listed zone. We took trade in the another zone that is newly created on Monday. Monday, a new zone is confirmed. Same Monday prices retraced back into this zone. And when it reached the target on Tuesday, next day. Monday you took the trade, Tuesday it reached, and you might have exited the trade. And how much profit you would have got? Roughly let us calculate. Let me open the margin calculator. And what is this stock? Bharti Airtel. Let me copy. So 27th February futures I am selecting. So what is the lot size? 475 is the lot size. How much profit you would have got? These are the rough calculations, not the accurate calculations, approximate calculations. Okay. What is my target? My target is a profit level. So 1770 paisa is my target. Is it achieved? Yes, achieved. Okay, target minus, what is my entry here? Entry price is 1678.80 paisa. So you got 21 rupees 9 paisa, 21 rupees 90 paisa profit you got on each stock. And what is the lot size? 475 into 475. You would have got 10,402 rupees profit in 2 trading days. First trading day you got the trade, and next trading session it reached the target. And what could be your ROI within 2 days? How much ROI you would have got? Approximately, let me calculate ROI. Okay, this is 1,44,936. This is the today's price. Let us see how far from this current zone our price. Based on that, roughly I will calculate. I can at least predict some value. So now I am removing this replay bar. Okay. So the price is here. We took a trade here. And what is the cost? 1,44,936. So probably maybe around at the time prices reached here, the value could have been maybe around some 800 or 900 rupees. Less value might be there with the current price. Current 1,44,936. Most probably the value could be around 1,44,000 rupees. 1,44,000. Roughly I am calculating that by seeing this distance. So this is your profit. So into 100 divided by, let us assume approximate value, the margin cost at the time price reached this zone could be 1,44,000 rupees. You got 7.2%, 7.2% ROA you got. Return on the investment in 2 trading sessions. And when you got the trade around at 12:45, you got the trade. At 12:45 candle, see how sharply it started moving up after it reached the 15-minute zone. This is our entry zone, 15-minute zone. How sharply it moved and reached the target. When it reached the target, 9:15, morning 9:15 candle itself. So that means next day when market is open, probably the first 15 minutes. This is a 15 minutes candle, right? If you go to 5 minutes, you will understand. 5 minutes also it is morning 9:15 candle. In case if 9:15 candle you missed, see once again prices are here in 9:35 candle. Either way you might have exited your trade. So that means just before when the trading is started in the market, within few minutes you would have exited and your money is released. Same money you might have invested in some other stock. So this is the power of bullish trade setup. If you don't understand this bullish and bearish trade setup concepts properly, blindly you are following what software generated reports, you will be missing such kind of trades. Why you learn the subject, supply demand zone concepts, so that you should understand all these concepts. All these concepts we already discussed in our training course. The training lessons I explained. I think in lesson 23 I explained these concepts. Even if you miss in those sessions, now practically you have seen. This is our software generated zone. The next day morning, the 75 minutes candle is created here. A new candle is created, drop base rally is created. This drop base rally, and that way this zone has got expired. That means no more valid. Now immediately you will mark on your charts drop base rally, and then prices retraced back and gave you the trade, and then again moved and reached the target. So that's it. It is over. And are there any more 75-minute zones, demand zones created? Yes, there is one more 75-minute zone is created. When? On Wednesday. Leg out is on Thursday. Thursday it is confirmed. What is it you have? You have a rally base rally. Let me draw the zone. A new 75-minute zone is here. So this is a new 75-minute zone, rally base rally. The moment this new 75-minute zone rally base rally is created, this one got the expiry date. Already this one got expiry. Now the one we got the trade, a successful trade, now it got the expiry period. The moment this rally base rally is created. Now can we plan a trade? Maybe you can plan a trade, but you have to plan your trade in the entry time frame. This is the intermediate time frame. So now go to the 15 minutes time frame. Check in the 15 minutes time frame, any zones are here. There is no proper 15-minute zone here. There is no 15-minute zone. See, this is a failed ERC candle. This is a rally candle, in between no base candles. Then where is the valid 15-minute zone here? Here you have a valid 15-minute zone. Drop, 2 base candles and rally. If prices wants to reach this zone, this 75-minute zone has to be violated. Let me draw the 15-minute zone so that you get clarity. Drop base rally. This is the 15 minutes demand zone. Where is this 15 minutes demand zone? Below the 75 minutes demand zone. So if price wants to reach up to this 15-minute zone, this 75 minutes demand zone has to be violated. If this is violated, what will happen? 75 minutes trend will be changed to sideways. Now this is no more a bullish trade setup. This zone does not support bullish trade setup. Because this zone is getting violated. So that way, this zone does not support bullish trade setup. That means this zone got the expiry date. So no need to draw this zone. So got it. Okay. So at present, there are no proper 15-minute zones here. Still trend is, see, the trend is uptrend only in this stock, 75 minutes time frame. But we don't have a proper 15-minute zone to plan our trade. Actually, here we have one 15-minute zone, newly created zone here, you see. Rally, base, rally. This is there. Maybe here there is no zone, proper zone, but here a zone is created. See here, rally failed, ERC rally, base, rally. The zone is created 11:30 on last Friday, and then immediately prices came multiple times and then started multiple times. They stayed within the zone and finally it gave some good return. Is there any 15 minutes target here? Yes, here we have a drop base, drop is there. Any more in between? No. This could be the target, but this is slightly pierced, this zone. This is the 15-minute supply zone. Slightly missed the entry. But this target, if you are planning from here to here, do we get RR? No, you won't get RR. Look into, say, I doubt you may not get RR. You have 1:2, RR is there, 1:2. So that means you can't take a trade. First of all, is this zone a valid 15-minute zone? That means a fine-tuned 5-minute zone should be there. Otherwise, this zone will be violated. Go to the 5 minutes time frame. So it is having a fine-tuned zone. See, from the 5-minute zone it took and then prices moved up. After that, this fine-tuned 5-minute zone is also violated. Second time. First time they moved from here. Let me draw a fine-tuned 5-minute zone here, the demand zone. And is it a successful trade? Actually, it is a successful trade because minimum 1:3 would have been given. I am sure it would have given 1:3. More than at least 1:5 also it might have given. Let me check. This could be your entry. One is to 5 RR it has given. But if you keep your target of below the 15-minute demand zone, you won't get RR. You got only 1:2 RR. Sorry, 1:1.2 RR. If only 5 minutes level if you keep your entry. If you keep your entry at the 5 minutes level, it is like again an intraday trade. It's not a DIT setup. DIT setup, but you are planning within the DIT setup, you are planning intraday related trade. That way you have to assume. Okay. After that, one more drop base rally is created. The 5-minute zone. See here? We have a 5-minute zone here. We have a drop base. Actually, this is a failed ERC candle. We have to consider as a rally or drop. It is in between. Suppose if you consider as a rally, the risk will be reduced. Otherwise, this is the risk. Okay, from here, do we have RR? Let us check. Here you are taking the trade. Still this supply zone, you won't be getting RR. You are getting 1:2.8. To reduce the, to achieve the RR, what is the technique we can do? Take an entry, a deep inside. Let me reduce the entry to fine tuning the entry. Go below, go below, go below until you get 1:3 RR. You adjust. Then only you plan your trade. Now you got 1:3 RR. If you take your entry here, till this supply zone, you will be getting 1:3 RR. Is it achieved? Yes. You got an entry here. See here, prices entered. You would have got a trade. Prices moved up, moved up, moved up. But slightly failed to reach. Why failed to reach? Here some 5-minute zone is strongly holding the prices. This is 5-minute zone. That 5-minute zone again pushed the prices down. Maybe who knows, tomorrow, next trading session, prices again move. This 5-minute zone might be violated and then it reach the 15-minute target. It may reach the target. That possibility is there. See, the same, your software has identified this, but actually you got your trade here and maybe your second trade again you got here. How you are identifying all these zones? Manually. Initially software gave you the clue. This stock is supporting bullish trade setup. And also your software told in case prices reach here, you take a trade. And also your concept is telling, what your concept is saying, if a new 75-minute zone is created, it gets the expiry. It is no more valid. Now you have to start planning your trades from the newly created 75-minute zone. That way you got the entry and reached the target, and that gave you 7.2% ROI it has given. After that, prices further moved and again a new 75-minute zone is created. Within the 75-minute zone, you have a 15-minute zone. Within the 15, you have a fine-tuned 5-minute zone. And from there, you adjusted your entry. After you adjusted the entry, prices were almost close to the 15-minute target zone it reached. Still your trade might be on. There are two possibilities. Tomorrow it will reach, or maybe tomorrow it might be stopped out. Anything can happen. But this is how you should analyze the stocks. When we have to analyze, this is not the analysis, this is extension to your earlier analysis. Probably that is the right word. Previously you already analyzed this zone. After that, based on the market dynamics, you know that market is dynamic. I always tell this point. Because market is dynamic, new zones might be created. When new zones are created, your earlier analysis will be changed. See, if anybody give you the recommendation, this is the recommendation, what you will be doing? You keep on waiting until the prices reach it here. But you already learned the course. Why I am telling everybody should become independent traders? This is the main reason. See how Bharti Airtel has given successful trades, even though the software identified zone is this one, but still it gave successful trades and you would have got good profits because still it is Bharti Airtel is maintaining uptrend for DIT trade setup. The trend is not changed. Once this latest 75-minute zone is violated, at the time trend will be changed to sideways. At the time you can't plan any bullish trade setup until again the trend in Bharti Airtel at 75 minutes reaches to uptrend. Hope you got the clarity. Okay, this is about Bharti Airtel. So the next one, what is the next stocks we got? This is M&M. M&M, this is the one we identified, the 15-minute zone. Our software identified failed ERC as a leg-in, base rally. And this 15-minute zone is stopped out. When it is stopped out? On Tuesday. But before it stopped out, is any new 75-minute zone is created? That is very important. You cannot say this is a stopped out. If new 75 minutes trend is changed, then there is no surprise if it is stopped out because the trend is already changed. So that's why. See, when we identified this stock, let me go to the 75 minutes time frame first. Our 15-minute zone is inside a 75-minute zone. This is the one. And when we identified last Friday, end of the day, this is the last candle. So let me go to the replay bar and let me cut all these candles. This was the situation when our software identified this zone. Here we have a target 15-minute zone. Prices did not reach here. They were just moving. And after that, what happened? Let me look into let me forward the candles. So this is what happened on the first candle on the next trading session on Monday. After our software identified the next trading session, this is the candle, a failed ERC candle. A base candle is created, a drop candle is created, again a drop candle, again a drop candle. Now prices entered into the 75-minute zone, but they are yet to enter into our 15-minute zone. This is 75-minute zone they entered. Price once again entered inside the 75-minute zone. Once again they came very close to our zone. Now we got the entry and immediately the zone is stopped out. And the trade would have been stopped out. We have to accept. Anyway, you will be planning your trade in such a way, risk will be within 2% level, not beyond 2% level. There are times zones will be stopped out. You may ask, some people ask, what could be the reason why it is stopped out? It is having a fine-tuned 5-minute zone. The reason is very simple. There is only one reason. Actually, two reasons. Mostly one reason will be mostly valid. What is the mostly valid reason? Maybe on this day the supply is much stronger than the demand. See, with the huge leg out candle, this entire zone is gone. Maybe here base candles 1, 2, 3, 4, 5, 6, and this is a drop candle. Drop, 6 base candles and drop. So a lot of imbalance took place. There was a balance here. Then immediately imbalance. That means supply has been increased. They increased the supply in such a way this entire demand is consumed. This is the main reason. Anytime people ask, is there any reason for this zone violation? The reason is simple. Either demand exceeds the supply, the supply zone will be violated. Similarly, when supply exceeds the demand zone will be violated. That is what happened. Okay, what could be the second reason? Rare situations. Second reason is institutions might have cancelled their order flows in this zone. Why they cancel? They have other calculations maybe. They have their own calculations why they should cancel. Maybe they have their new calculations. They want to invest this money in some other stock. There are 100 reasons why we can't tell why they cancel. At the time also easily zone will be violated. There could be 2 reasons, that's it. But cancellation of the orders won't happen every time. Rare situations. So that's why I'm saying main reason is mostly institutions increased more supply here compared to the demand the zone is currently holding. That's why it might have been violated. Is it pierced? Yes, slightly pierced. That means this zone will be no more valid. Next easily it will be further violated. . Completely gone. if you think, suppose if it is not violated here, if in case if any doubt is there, now it is completely violated. Once the zone is violated, what will happen? Trend on this M&M will be changed to, actually this is, daily zone. Here itself trend is changed, because this is the 75-minute zone. Here, see, rally base rally, this is 75. Actually I thought this is 75. No, this rally base rally. But here also 75, rally base rally, LOTL. Okay, both are LOTL zones, right? In LOTL scenario, both has to be violated. Okay, now trend is changed to sideways. The moment trend is changed to sideways, this M&M is no more supporting bullish trade setup. So you can't plan any bullish trade setups in this zone. That's it. It's gone. So this is on this Friday. Okay, this is about M&M. M&M is stopped out. Next one is HDFC Bank. HDFC Bank, let's go to the 15 minutes time frame. So this was the trade. Monday prices came into this zone. Monday, this was the last time our software given the recommendation. Prices came, and a lot of time the prices here slightly pierced, but it will be within your stop buffer. The whole day prices moved up, but not good enough to reach your target. What could be your target? The nearest one. What is the nearest zone? This is the one. Drop base drop. This is again another important point you have to learn here. So this is the new supply zone. So that means when you want to take a trade in this zone, this should be your supply zone. And is it having a, first of all, fine-tuned 5-minute zone? That is very important. Yes, this is having a fine-tuned 5-minute zones are there. Drop base rally, rally base rally. So that means this 15-minute zone is a very good zone for planning your trade. Okay. So this is the 15-minute zone identified by our software. Drop base rally. Okay. To minimize the risk, type 2 proximal, you will plan your trade. Type 2 proximal. So this is the type 2 proximal rally, drop base rally. Now here, from this 15-minute zone till this newly created supply zone, do we have minimum 1:3 RR? That is important. If minimum 1:3 RR is not there, you won't plan your trade. Because in the checklist item lesson 20, what did you learn? Minimum 1:3 RR should be there. Okay, let us assume approximately I am just saying this could be the stop buffer. And this is your entry. And this is your target. What is the RR you have? 1:2 RR is there. Do you accept the trade? No. Or you can accept the trade. The option is you fine-tune the entry. Fine-tune the entry in such a way it gets minimum 1:3 RR. Okay. That way, if you would have taken a trade, but after that prices moved, is it reached the target? No, it failed. After that, next day, this zone is violated. It is stopped out. If you fine-tune the entry, take the trade, your trade would have been stopped out. If you, because RR is not there, if you would have rejected bluntly, you would have saved. It's all depending on the individual's decision making. But okay, zone's point of view, zone is stopped out. We have to accept. It is a stopped out trade. Okay, why it is stopped out? Immediately you will ask. Same reasons. Maybe the day supply might have been dominated. Definitely this zone will violate. There is next time prices come. There is no question in that. Why? Definitely it will violate. First let me delete this long position. Okay, now you see clearly. See how much time prices stayed here. And moreover, what happened here? Pierced. The zone is pierced. That means this entire zone power is gone. Next time easily institutions can make this zone violated. That is what happened. In such kind of situation, what we have to do when a zone is pierced? That is not easy to explain, because sometimes what happens, zone pierce, sharply it will move, and maybe next 1 or 2 days it will reach the target. That possibility is there. But all of a sudden supply is dominating. What happens? Because supply will push here, no institutional order flow, easily it will be violated. That is what happened. See, after seeing the price action, our decision making is very easy. But without looking into the price action, your decision making, what do you believe here? Is it going to better to exit here? Come out of the trade? Or anyway, many times stop buffer it will enter and prices will reach the target. Shall we hold? It's not easy to take the decision, right? But whatever it is a stopped out trade. It is having two excellent fine-tuned 5-minute zones. Even then it is violated. Because here it consumed all the, maybe the supply is very strong, consumed, and demand is also strong here. See, that's why you see, a lot of time there was a fight happened within this zone. A lot of consolidation took place. But the question is, whether prices will move up or again it will go down and it will stop out. That kind of prediction is not easy. But anyway, HDFC Bank is stopped out. What about the next stock? RT Industries. RT Industries is already tested. On Friday itself it is tested. Our software displayed, because our software tested zones we are not filtering. Manually only we have to take a decision. Why? Because sometimes there could be a high liquidity zones will be there. It may support multi-testing. We don't want to miss such kind of opportunities. So that is the reason why I am not filtering the tested zones. We have an option in our software to filter the tested zones, but we are not filtering. We have to take the decision manually only, because we don't want to miss high liquidity. Any 5 minutes high liquidity zones are there. Such kind of trades, we don't want to miss them. If you filter the tested zones, high liquidity zones will be eliminated from the list. So that's why, see, anyway, it is already tested only once. So because it is not a fresh zone, next time you won't plan any trade. Already this zone gave very good profit. Previous day, if this zone might have been listed, Friday we would have taken a trade and booked the profit here. So it is not a surprise. We know this zone will be violated because it is already tested. And the next one is Navin Fluorine. See, this is see here is the importance. Navin Fluorine actually reached the target. Slightly pierced, within the stop buffer it will be there, but reached the target. You may say it is a tested zone. Yes, it is a tested zone. Even then we take trade. Why? Because see, this zone, how many times? Several times this zone is getting tested. Tested here, tested here, tested here. Actually prices reach deep. Even then next time again tested from. That means institutions keep on adding a new order flows here. And is it pierced here? No, not pierced. If it is pierced, you would not have taken the next trade. Once a zone is pierced, we won't take the next trade. Okay. This is on Friday. And this is on Monday. See, Monday prices entered into the zone and gave a trade. Go to the 5 minutes time frame, you get even better clarity. Because it is a high liquidity zone, this 15-minute zone is a high liquidity zone, definitely we plan our trade once again, because we don't want to miss trades from high liquidity zone. But zone is pierced. Definitely it will be within our stop buffer, because it is a 15-minute zone. Maybe definitely our stop buffer will be there up to here. But from here to here, do we have 1:3 RR? That is important. Let us check. We have 1:2.91. That means approximately it is 1:3 RR. Maybe if it is a stop buffer, could be even a little up also. It is close to 1:3 RR. Has it been reached? Yes, it reached. When you got the trade in the morning 9:20 candle. See, this is morning 9:20 candle. Prices came down, but it will be within the stop buffer. After that, sharply moving up. And Monday itself, it reached the target. Monday at 11:05, it reached the target. This is the way you would have got a successful in your trade. And moreover, one other thing for the managing the risk, actually type 2 proximal mostly you will prefer, right? Okay, anyway, type 2 also very small only. Not much difference is there. Drop base drop. Even small change will improve your RR. See, this is your entry. So you got, see, all of a sudden a small change, 1:3.5 RR is achieved. So definitely here, from here to here, you have the RR. RR is available. So how much profit? Actually, this is a high liquidity zone trade setup. High liquidity means not your high liquidity zone strategy. That is a different one. What you learned in the first lesson in lesson 29, that high liquidity zone strategy is different. That is daily and 75-minute zones point of view. But this here, your zone itself is a high liquidity zone. So how much profit it would have given same day? Naveen Florine, what is your target? Target is your profit level is 4243.55. Let us see approximately. Let us calculate. Minus your entry price 4178.80 paisa. You got 64 rupees 75 paisa. On each share you would have got the profit from this stock. Okay, what is the lot size if you take a, let us assume if you would have taken a trade in futures. I think Naveen Florine, this is only the last month. We don't have data after that. Probably this is the last month for this futures. That means they are removing it from the futures. I mean F&O. Okay, anyway. At present it is there, 64.75 into 175 lot size. You would have got 11,331 rupees profit. Lot size, what could have been the lot size when it was, let us calculate, rough calculation. Now price is here. When we took the trade somewhere here, the price could have been even more. It would go more than 1131. From here, probably it could have been 1,51,500 rupees, maybe approximately. Approximately 1,51,500. Oh, I made a mistake. 11,331.25. into 100 divided by the lot size 1,51,500 approximate value. So you would have got 7.47 ROI. That means 7.5%, the rounded value. And that too you target reached in the intraday. Morning 9:25 in the 5 minutes candles, morning 9:25 candle, it gave you the entry right here. Yeah, 9:20 candle, morning 9:20 candle, it gave you the entry and reached the target at 11:05, say 11:20 approximately. In 2 hours, trade is completed. Remember, this is not an intraday trade. This is not intraday trade. This is short-term trade, but prices reached the target intraday itself. See, previously you have seen Bharti Airtel price reached next day. Okay, this is about Navin Fluorine. Next, what is the next stock? Ambuja Cement. Ambuja Cement also we predicted because this zone will be, it is already a tested zone. Friday. And after that it gave a very good profit. So before the day report, if you would have taken, this stock would have been listed. Friday you would have got, say let us assume, Thursday report, if you look into that, Thursday software would have given this. So Friday you would have got a trade. You would have got a good profit. But we generated our software on Friday. By the time our software generated, it gave a already good profit. And it is not a high liquidity zone, may not be a high liquidity zone. So next time it's stopped out. Once it is stopped out, is it invalid? No. Because our trend is on the 75, not 15 minutes. Go to the 75 minutes time frame. Check where is the 75 minute zone is there. If that 75 minute zone is violated, then we can say this stock is not supporting bullish trade setup. Here you see, you have rally base drop. This is the 75 minute zone. Now this trend is changed. When? 12th February, Wednesday. So from 12th February onwards, it is no more supporting Ambuja Cement, no more supporting bullish trade setup. This zone is violated. We will agree. That way this is gone. Okay, next one is Axis Bank. See, Axis Bank already tested this zone and then moved up. Can we take a second trade? We can plan a second trade because it is having a fine-tuned 5 minute zone. Go to 5 minutes time frame. It is having a fine-tuned 5 minute zone, drop base rally, and it is not fresh. Type 2, let us see. Type 2 is also just tested. Maybe it is not a fresh zone, fine-tuned 5 minute zone. If it is a fresh zone, maybe we would have planned one more trade from here. Moved up, but not good enough to get the profit. Maybe you would have got 1:3 RR, you would have got. But anyway, it is a tested zone. It is quite risky to plan a trade again here. Maybe it worked here. But previously already, this zone already gave a good profit from this zone. So that's why Axis Bank, we didn't plan any trades. Or even if you can plan a trade here, if it would have been a fresh zone. After that, the zone is violated, and obviously, if 75 minute zone is any zone is violated, trend will change on the, yeah, here we have a rally base rally that is violated in this candle. Now 75 minutes trend is changed to sideways. So this stock does not support bullish trade setup. Next one is a Glenmark. Glenmark also see here rally, base, rally. This is violated. That way trend 75 minutes trend is changed. Now this stock no more. But what about our stock, our 15 minute zone? Our 15 minute zone is easily stopped out. First of all, can we plan a trade in this stock? If fine-tuned 5 minute zone is there, we will plan. Go to the 5 minutes time frame. Is it having a fine-tuned zone? Yes, it is there. We have a rally, base, rally, follow through candles. So definitely this zone we will plan our trade. Okay, but another thing, before planning the trade, let's go to the 15 minutes time frame. Is it having RR first of all? That is important, right? Before prices are reaching here, do we have RR? When prices entered here Tuesday morning 9:15 candle. Where is the nearest supply zone, 15 minute supply zone? This is the one. This should be your target, this should be your entry. If you are planning your trade, do we get RR? No, you won't get RR. If you don't get RR, do we plan the trade? No. See here. This is our stop buffer, approximate value. This is our entry. Okay, because to reduce the risk, we plan type 2 proximal. So this is type 2 proximal. That means your entry will be at here. And this is your target. What is the RR you have? You have 1:1 RR is there. The only option, if you really want to, when you have such a short target, it is quite risky. Or the only option is you have to go inside until you get. See, now you got. Going so much near to the digital line is quite risky. It's not easy. If that is the case, you should plan a fine-tuned 5 minute zone. Anything is there at that level? Is there any fine-tuned 5 minute zone? Here it is having a fine-tuned 5 minute zone. Maybe when prices are reaching, you can plan. But fine-tuned 5 minute zone also, if you want to plan, again you have to move it a little up. Now what is the RR you have? 1:9.2. That way you can't accept this trade. Because you don't have the RR. So that way you might have escaped from this stopped out because you reject this trade. See, when our software is generated, your 15 minute zone is somewhere here. Somewhere here, you have a drop. From here to here, you have enough RR is there. That's why software listed this. Suppose if the RR is not good enough, our software might have filtered. Or even if it is not filtered, your odd enhancer score will be reduced. That way your stock would have been filtered, rejected. But here you have a very good RR. You have a rally base drop. From here to here, you have RR is there. This is at the time when your software listed. But after that, what happened? Market again changed dynamically. Now again a new base drop is created. The moment base drop, your RR is changing now. There is no minimum 1:3 RR, you reject. So that's why I always say, before prices are entering into the zone, you should look into the RR. Same points I explained in the previous video also, but now practically you are seeing. Because this price action did not happen when we discussed it during last week. Now, when this price action happened, we discussed on 8th Saturday. Monday is the trading day, that is the 10th February. So 10th February the price action happened, new zone was created. Immediately before taking the trade, you should check with the new zone RR is there or not. RR is not there, you reject the trade. That's it. Okay, next one is Birla Soft. And these are all supply zones. So this is the supply zone our software suggested. After that, prices reached? No. Is it still valid, this zone? Go to the 75 minutes time frame. Check any 75 minute supply zones are created. After that. So here our software listed this stock. This is on Friday. Okay, Monday. Here Monday price action. Here, see here, you have a drop candle, base candle, drop candle. A new 75 minute zone is created. That means this zone is no more valid. This 75 minutes. Inside 75 we have 15 minutes zone. It's not valid. That means the moment this new supply zone is created, this 75 minutes zone got the expiry. Now here any 15 minute zones, now you can plan your trades. But after that again drop base, drop is created with the failed ERC hidden body. And this drop base drop is violated. Now this stock is no more supporting bearish trade setup. Okay, next one is NCC. See here we are planning a trade, but prices did not reach. See Monday, this is last Friday. Now you see drop base drop is created here. Let me delete this demand zone. Drop base drop is created, a 75 minute zone. This is no more valid. It got the expiry. But still, is it continuing bearish trade setup? Yes, still it is continuing because none of the 75 minutes demand zones are tested. Moreover, if this is having any 15 minute zone, we would have got a trade on Wednesday. Let's go to the 75 minute zone, drop base drop. Is there any 15 minute zone? Let's check. Yes, there is a 15 minute zone here. Drop base, rally base drop. This is the 15 minute zone. Unfortunately, prices did not reach and you missed a very good trade. Otherwise, it could have been a very good trade for you. This 15 minute zone, prices did not reach. Before entering into the zone, prices came down. Otherwise, you would have got a very good profit in this particular stock. So that way, NCC, we didn't get any trade opportunities. But the thing is, the software generated zone is expired. Hope you understood now what exactly the meaning of expiry period of a software generated demand and supply zones. When a new 75 minute supply zone is created, our software generated 75 minutes, zones are expired. Next one is Astral. We have a 15 minute zone that is inside the 75 minute zone. This drop base drop is 75 minute zone. Prices entered? No. So is our zone expired? Yes. When it is expired, when it created a new zone here, maybe here. Drop base drop. So this is the 75 minute zone. So it got the expiry. After that, prices again entered and again came down. So is there any 15-minute zone? Otherwise, we would have got a very good profit in this. Let's go to the 15 minutes time frame. Here, is there any 15-minute zone? Yes, rally base drop is there. Let's draw that zone. Is price entered? Yes, price entered into the zone and then sharply came down. If anybody would have taken a trade, you would have got a very good profit. But what about the risk here? Risk is a huge risk. If the risk is beyond 2%, you can't take a trade in this zone. I doubt the risk in this zone will be beyond 2%, mostly beyond 2%. Let us see how much risk it is having. I'm calculating the risk without adding stop buffer. If you add stop buffer, more risk will come. First, without stop buffer, how much risk is there? Let me calculate. Because you should understand all these points. That's why I'm doing this calculations part. You have 17.3 risk. 1% means 1429. That is in the cash segment. But in future segment, the 1% is beyond your... because you are getting... margin. Because of the margin, risk will increase. So F&O you can't take, but cash segment you can take a trade. See, 17.3 into 367 rupees equals to 6,000 you would have lost in case if it is stopped out. And what is the margin value? This is here. By the time, suppose in case from here when it come down, more value will be there because the current value is 88,192. Maybe another 400-500 rupees extra price might be there. So let me say it is 88,000, say 500 rupees or 600 rupees. So into 100 divided by 88,000, say 600. See, 7.1% risk. What is the accepted risk? Only 2%. 7.1 we should expect profits, not the risk. So such kind of stock, do you plan your trade? No, you can't take a trade. You may ask a question, I do position sizing and I can take a trade. If it is an intraday trade, you can take, but this is not an intraday trade. This is a daily income trade, DIT. DIT trade, sometimes you may need to hold the stock for 2 days or even 3 days or 4 days sometimes before reach the target. Intraday trade, cash segment you can take for the short positions. Long position not a problem. Long position, even a DIT trade or even in any trade or even in swing trades also like MIT trades also, you can take cash. You can buy. But short positions you can't carry beyond the intraday. Only futures only you can carry. But future risk is 7.1% risk is there. You can't do position sizing. Unless you are a high valued investor and you are buying some 10 lots. Instead of 1 lot you take. That way you can manage the risk. But we can't buy those many lots, right? So that's why you can't accept this trade. It looks like it gave a very good profit. Even it reached 15 minutes zone. Still we can't take the trade because of very high risk. And short trades you can't take beyond the intraday. So cash segment you can't take any trade. You have to, only option is futures only you have to take. Because of this much huge risk in futures, you can't take trade in this stock. So that way we missed an opportunity here. Okay, fine, no problem. Because we have the skill, because of our skill, we are identifying the zones. How we are identifying? Beyond the what software has suggested, we are identifying. Anyway, the next day software will change its opinion. In the next day software generation, the expired stocks, it won't display. But the day when you analyze and comparing those from your analysis day, when these zones will expire, that understanding is very, very important. Okay. Here it looks like we got a trade here. Yes, we have a high liquidity zone also here. Yeah, when we got the trade, we got the trade on Thursday, 6th February. And when our software identified this zone, our software identified this zone on Friday. Friday we are here. So that means before our software identified this zone is already tested and came down. That means it already gave profits. So that means maybe next time again, once again prices go here, we will plan, because it is a high liquidity zone. Multiple times it is testing and LOTL zones are creating. See here, rally base drop. But still, is it valid? So go to the 75 minutes. 75 is ITF time frame. So I'm going to the ITF time frame. ITF time frame, any new supply zones are created? Yes. We have a rally base drop created here. Again, drop base drop is created. Again here, drop base drop is created. So that's why this zone is not valid anymore. But this drop base drop, you would have got the profit. See here, rally base drop, prices went, came down. Let us check whether any 15-minute zone is there. If 15-minute zone is not there, you can't plan a trade, right? Yes, you have a 15-minute zone. Here you have rally base drop, 15-minute zone. Okay, generally to minimize the risk, we take type 2 proximal. Type 2 proximal, do we get? Yes, almost came. Generally, you add small entry buffer. Your trade would have been executed here. But before taking the trade, you should ensure there is a 5 minutes, fine-tuned 5 minutes. Otherwise, this zone might be violated. Let us check whether there is any fine-tuned 5-minute zone inside. Yes. We have a rally, 2 base candles and a drop candle. Again, you have a drop candle, base candle, consideration somewhat I am doubtful. If they are mini size candle, we can draw drop base drop. If they are medium size candle, both are leg candles, not base candles. But anyway, here we have rally base drop. At least we have a confirmation this zone is having a strong institutional order flow. You may not be taking trade in the fine-tuned area because it is not an intraday trade. Many times bullish bearish trade setup, the fine-tuned area prices may not reach. But what should be the target? This is the target. Here you got the trade and reached the target. But do you accept risk is will be supported, RR will be supported? That is important. If RR is risk reward is not there, you may not be taking the trade. So let us check calculate using short position. Some entry buffer also we are adding. You don't have RR. You are having only 1:7 RR. To get the RR, one option is whether you can fine tune this zone until you get 1:3 RR. Okay. So here you need to take a trade. But is prices reached? No. That means you missed this trade. It looks like it is successful, but practically you would not have taken this trade. There are two reasons. Reason number one, RR is not there, you would have rejected. Reason number two, you might have fine-tuned your entry. Still this trade is not executed because the price did not reach the fine-tuned entry level. So in either case, you might have missed this trade. Got it? This is how we have to plan in the real time when you are planning, because RR is very, very important. If RR is not there, either you have to reject or you need to fine-tune the entry. But while fine-tuning, if you go very close to the distal, you should not accept that. You have to reject the trade. This much fine-tuning is okay, maybe somewhat okay, this is at least. Because we didn't go very deep, right? We are middle, even before middle itself. So this is okay. But we narrowly miss the trade here. Okay, fine. Next, any other thing, other zones are created here? Yes. This one we missed. After that, base drop is created. Let us look into that. Let me delete this for time being for better clarity. See here, base drop. And this is 75-minute zone. Prices entered and came down, right? Maybe this zone is working like high liquidity zone. It has given multiple trades. It's a high liquidity zone. First of all, if you want to take a trade inside, 15-minute zone should be there. Let's go to the 15 minutes time frame. Let us check. Is there any 15-minute zone? Yes. Maybe failed ERC candle as a leg-in. You have a base candle. You have a drop candle. Let me draw type 2 proximal point of view. See, prices reached and sharply it came down. Where is the target zone? So here you have a failed ERC as a rally and your 15 minutes target zone. You can draw a zone. So this is a 15 minutes demand zone. So this could be your target. Now the question is, can we take a trade? This trade you cannot take a trade because RR won't be there in this trade. Moreover, risk will be higher. This zone, definitely, by seeing the zone, I can understand the risk will be high. Because the risk is high, you need to take a deep inside. If you take deep inside, you should not go beyond the fine-tuned 5-minute zone. First of all, is it having a fine-tuned 5-minute zone? No, this is not having a fine-tuned 5-minute zone. But this is having an horizon. See here, drop, base, drop. This is a lesson 22 concept. Lower time frame zone as an horizon to the higher time frame zone. At this horizon, you can plan your trade. See this horizon, how strongly it is holding the prices. And here it almost reached, maybe with small entry buffer before the horizon, you would have got a trade here. But none of these trades you would have missed it. And because RR is not there, you can't plan all these trades. So let me remove. This is violated. But after that, any new demand zones are created here? Yes. 15 minutes demand. These are the 5 minutes demand zones. Let me go to 15 minutes time frame now. Yes, here you have a rally base rally. This is the 15-minute zone. This should be your new target zone. Is it reached? Yes. See, here you got the entry and here it reached. And when you got the entry at Wednesday, 12:45. When it reached the target, Thursday, next day, morning 9:15 candle, it reached the target. Here you would have got the trade, maybe small entry buffer. You would have added here, but let me use this short position. That is easy to calculate. Approximately, I am keeping some stop buffer here. And entry with small entry buffer, I will make sure this trade would have been executed. See, these are all, we are calculating the possibility. Is it reached the target? Yes, almost reached the target here. RR is there? Yes, we have 1:3.94. Almost, that means close to 1:4 RR we have. So that way this could have been a successful trade for you. But earlier, why we didn't take it? Because earlier RR was not there. There was a demand zone, we deleted. Till that RR is not there. And moreover, we need to take trades here. You can't take the trade here. You have to take the trade from here. So third time everything is perfectly matched. Now the risk is within your accepted limit. That means within 2% level. And also reached your supply zone, and 1:4 RR also it gave. This is the way you could have got a short trade opportunity from this zone. How we identified? Software has given this zone. By taking this zone, we further extended our analysis on this stock. How long we will extend your analysis? Until the bullishness or bearishness changes in that stock. When bullishness or bearishness change, we can identify. In the intermediate time frame, you can identify. Until the trend is not changed, you will be keep on planning your trades, or if the new zones are created, you will extending your analysis to the new zones by leaving the earlier zones. See, this is the earlier zone identified by the software. But the real opportunity we took in this particular zone. Is it still supporting bullish trade setup? Yes. Now all these zones are old zones are gone. All these zones are gone. Here you got some profit. And here I am keeping, because this is software generated, for the reference purpose I am keeping. Otherwise you will delete even these zones also. Okay, now what is the latest newly created? This is the one, rally, 3 base candles and a drop candle. This is the newly 75-minute zone. Let me draw. This is the newly 75 minutes. Inside 75, 15-minute zone is there. Then only it is valid for you. Yes, you have a 15 drop base, a drop is there. You have one more is also there, drop base, drop. This is also valid. Maybe all these are all base candles, maybe. Suppose if this is violated here. If this is violated, trend will be changing, you may say. No. Trend changes will be on the ITF time frame. These 15-minute zones are LTF zones. LTF zone is violated, trend won't be changed. If ITF zone is violated, trend will be changed. This is the area initially beginners will get confusion. Confusion means we forgot the concepts quickly, initial stage. By seeing the 15 minutes entry time frame zone violated, you will be thinking, okay, it is no more a bullish trade setup or it is no more a bearish trade setup. That is the way we comment. Why? Because initially we didn't properly understood the concepts properly or not practiced in good enough. Once your experience grows, you understand our mistakes. That's why I know what kind of mistakes you make. That's why I'm telling. That's why I asked whether this is violated, trend will change or not. So if this is violated, trend won't change. If this entire 75-minute zone is violated, then trend will be changed to sideways. At the time, State Bank does not support bearish trade setup for daily income trade. But anyway, prices did not enter into this zone. Generally, to minimize the risk, you may take type 2 proximal entry. So you would not have got the trade. And next one is IGL. See, IGL is also a daily zone. Prices actually entered when Monday it gave a trade. This is the one we identified our analysis. This is here we have a 15 minutes target zone. This is the target zone. Monday market started. IGL gave you an entry here. This is Friday. Friday our software identified this zone. Monday prices went. They went almost deep inside. Okay, first of all, RR is available from here to here. Risk will be there within the limit. If not within the limit, you will adjust your entry. That's not a problem. Mostly this risk will be within your accepted 2%. Suppose if it is not within 2%, you adjust your entry a little above. Definitely your trade executed because it went up to the digital line and then came down. So how much RR is there? Let us check. Minimum 1:3 RR should be there. I'm going to the short position. Let me add some stop buffer here. Approximately I'm adding. This is our entry. The type 2 proximal. And this is our target. We have 1:3.5 RR is there. So Monday you got the trade, and when it reached the target, same Monday at 13:15. Because Monday morning 9:15 candle, mostly we would have avoided a trade. Yeah, this is morning 9:15 candle. See, the next candle you would have taken the trade. Because 9:15 we won't believe. And is it reached the distal line? No, it is not stopped out. It is within that zone only. 9:15, sometimes, freak trades may be there. Because of that, if one trade executed here, your candle wick shows very big. That's why 9:15 candle we can't believe. We can't trust. But anyway, next candle you would have got the trade. 9:16. So it's a successful trade. And reached. How much profit it would have given you? It would have given you the profit. Approximately we are calculating. Your entry price is 199.90 paisa. And your target profit level is 194.78 paisa. So you would have got 5 rupees profit on each stock. So what is IGL lot size? Let us calculate. Why I am calculating? Because this stock came immediately after our next day. Monday, this could have been a successful trade for you. And also it reached the target on the same day also. $2,750 lot size into 2,750. You would have got 14,000 rupees profit. 14,080. 14,000 rupees profit you got. What could be the ROI we would have got? So what is the current price? Here, closing price. So Monday's price from here to here, how much difference based on lot size we can identify. So definitely the value could be around 1 lakh, maybe another 1000 rupees, another 1000 rupees, definitely higher value might be there. So that means maybe 29,000, 1 lakh 29,000 could have been the lot size, approximately 1 lakh 29,000. So into 100 divided by 1 lakh 29,000, approximately we are calculating. Somewhere below or above, a little above or below will be there. So you would have got 10.9% ROA. That means close to 11% ROA you would have got. Same during the intraday itself. The bearish trade setup. So we got the trade. A successful trade. Okay, after your trade is successful, reached the target. Now, can we consider this again second time? First of all, it is tested, you can't consider. Let us assume if it is high liquidity, still you can't consider because a new drop-based drop is created. When a new drop-based drop is created, what will happen? The earlier zone identified by our software will automatically, it will expire. Okay. After that, prices entered into the zone and slightly pierced and then came down. So that means it gave you a trade here, the newly created one also. Let's go to the 15 minutes time frame. 15 minute zone should be there. Is there any 15 minute zone here? See, this is a failed ERC as a drop candle. Maybe this is also, you can keep a medium size rally candle. You have 1, 2, 3 base candles and drop candle. You can draw a 15 minute zone like this. This is the 15 minute supply zone. Okay, see here, slightly stopped out. Not stopped out, pierced. Because it is within your stop buffer only. Definitely this stock will be within your stop buffer. But to accept this zone, first of all, it should have a fine-tuned 5 minute zone. Otherwise, we can't go to the 5 minutes. Fine-tuned 5 minute zone is there. Yes, it is having. See, drop, base, drop. So definitely we accept this stock because it is having institutional. But your stop loss is not on the 5 minutes level. Your stop loss is at the 15 minutes level because this is a DIT trade, not a 5 minutes trade. But why we are looking for 5 minute zone? It is a confirmation. If a fine-tuned 5 minute zone is there, the zone may not be violated. At least 80% success chances are there to get success. For that confirmation, you are seeing 5 minute zone. But your stop buffer you have to keep above your 15 minute zone. Approximately your stop buffer could be, let me predict from here. Where is the horizontal lines? A little above, maybe somewhere here could be your stop buffer. See, this is within your stop buffer. Okay, and what is your target? Target could be 15 minute zone. Is there any 15 minute zones available here? All these are all small candles only, medium size candles. This is not a leg out candle. All these are all medium size. Here you have a leg out, but here you have a failed ERC candle. In between, no base candles. That means there is no zone here. And is there any zone here? Here you have, but this is not a valid leg out. All these are all medium size candles. Here you have a valid zone, drop base rally. Let me draw the zone. This is the demand zone. This is our target zone. You may ask, earlier we have drawn a zone, target zone. Is it not valid? No, it is not valid because see here, it is violated. After this violation, price is entered. Once it is violated, we will delete. Why I kept on the chart? Because previously we got one success trade. This is identified by our software. Next one we identified by taking our software zone as a reference. We extended our analysis. This is the skill you have to develop. How long we should extend? Until the trend changes. You extended your analysis. Because you extended your analysis, you got a trade here in this zone. When you got the trade on 13th February 11:45, and when it reached the target 14th February, the next trading day. 14th means our yesterday, the last Friday. That is yesterday is our Friday. That is 14th February. So yesterday it reached the target. How much profit it would have given? Let us calculate. This is our entry. And ROI also, huge ROI it has given, because in between there are no zones are available here. You can't draw rally-based rally because this is a medium-sized candle. This is also same. Here you have the actual drop-based rally. This is the perfect zone, 15 minutes. See, that's why easily all these zones are gone. And before prices reach, this zone is no more valid, because here again a drop-based drop is created. You may ask, but we are in the trade. Yeah, we are in the trade. We already took the trade. No issues. Next time you want to plan a new trade, that should be planned in this drop-based drop. This is no more valid after you took the trade. I mean, after this drop-based drop is created. But is it reached our target? Yes. You got on the 13th, you got the trade 11:45. 14th, at 10:30 it reached the target. How much profit it has given? So at 195.40 is our entry. And what is our target? This zone is the target. 187.09. 187, exactly 187. You got 8.4 rupees profit on each stock. And what is the lot size? 2750. Into 2750, you got 23,100 rupees profit. What is ROI? Into 100 divided by where you took the trade here. Here this price is there. So from here 1,27,963. Probably here by the time another 500 rupees or 600 rupees will be there. Here we took around 1,000 rupees, right? Maybe 700 or 800 rupees. So let me add around 800 rupees. So that means it could have been 1,28,000, some 700 rupees. Even little more I am adding. 1,28,700 could have been approximately your margin cost. How much profit you got? 17.948. That means almost 18% profit you got. Close to 18% ROI you got, not profit, ROI, return on the investment. Within 2 days, in just 2 days. First day you took the trade, next day you exited you booked the profit. See how perfectly our bearish trade setup is working. But our software identified zone is this is the one. Of course we got the trade. After that a new 75-minute zone is created. We extended our analysis to the new one, because this old one is expired. Okay, now we book the profit. Now this one is expired. The one we took the trade is expired because sorry, this is 15 minutes. Sorry for my mistake. This is a 15-minute zone. Let me go to 75 minutes. This is drop, base, drop. This is the one. Drop, base, drop is there. This is created. At present, this is the valid 75 minutes supply zone. So this is the 75 minutes supply zone. Within the 75, 15 minutes is there? Yes. We have a drop, base, drop, 15-minute zone is there. Here you can plan the trade, but risk is very high. When risk is very high, mostly we will avoid, you take a deep inside. See, this is how our bearish trade setups are working now. And the next one, last one is IRFC. So here also you see a 75-minute zone is there. Drop, 2 base candles and drop. Inside that, we have a 5-minute zone identified, sorry, 15-minute zone identified by our software. Here rally, base, drop, follow through candles. Monday prices entered, but they did not enter into the 15-minute zone. This is the 15-minute zone we plan, type 2 proximal for the risk management point of view, but prices did not reach. Instead, what happened? Let's go to the 75. At 75, see drop, base, drop is created, and here itself drop, base, drop is created. But anyway, both are LOTL zones, drop, base, drop. So still it is valid. But here it is, see here you have a drop, 2 base candles and a drop. This is gone. Our software generated zone is expired. And after that again drop, base, drop. Now this 75-minute zone is violated. The moment it is violated, now trend is changed to sideways. Now it is no more bearish trade setup. But have you noticed very interesting thing? It is also having a demand zone created. This is the supply zone. Drop, base, rally, demand zone is created. Trend is changed to sideways. 75 minutes trend, that is ITF trend. Now again institutions, they created a drop, base, drop, and this demand zone is again violated. Now sideways trend once again changed back to the downtrend. Do you remember the trend concepts you learned? From downtrend, trend will be changed to sideways. From sideways, there is no rule that trend should change to uptrend. Trend can change to the uptrend. Again, the downtrend will be continued. So the second scenario happened here. Again, the downtrend continued. Initially, trend is down. Downtrend is changed to sideways. From sideways, again, downtrend is getting continued. That means now this zone is still valid for bearish trade setup. Which zone? This is the one. This is drop, base, drop. Or if you consider all these are all base candles, you can also draw a zone like this. Supply zone. What happened? Something problem in trading view. Colors are not changing. Let me delete this and let me redraw. Okay, anyway, some trading view, some problem is there now. It's not changing the colors. Okay, anyway, it is a rally base drop. This is the supply zone. Now any new supply 15-minute zones are created here? Yes. You have a rally, 2 base candles and drop. That way this is valid for next. But if the risk is high, again you need to look into fine-tuned 5-minute zone. See, fine-tuned 5 minutes also same. Drop, 2 base candles, drop. So risk management is very, very high here. So because risk management is very, very high, either you avoid or take a deep inside, but taking a trade deep inside, many times you miss the trades. But hope you got better clarity by the time you complete this video. At least you might have understood the real situation. Probably you might have understood how we can extend our analysis after the software generated reports. From our extensions, how we can capture the new opportunities. You might have understood when our zones will be software generated zones, or maybe later on what we identified in our extended analysis, whatever newly identified zones, when they will expire. Now you might have got the clarity. When a new supply zone is created, ITF supply zone, the previously drawn, either identified by you or identified by the software, they automatically expire. The reason is, if the newly created zone violates, or anyway trend is changed to sideways. It does not support bearish trade setup, a demand zone bullish trade setup. So that's why when a new zones are created, ITF zones, the previously created zones will automatically expire. Hope this point everybody clearly understood. It's a very, very important point. If you think like that, you can get maximum profits. Got it? Now, have we covered everything from our Excel sheet? Yes, performance evaluation we have seen. And expiry period of the software generated demand and supply zones. Actually, third point also I should have mentioned. What is the third point? Extension to the analysis by identifying newly created zones and how we can plan the trades. That is also we discussed. So now this concept you can apply to any income trades. Same thing you can apply to weekly income trade. Same thing you can apply to monthly income trade. Maybe next I will be analyzing weekly zones. But the problem is weekly zones, I can complete the analysis. But performance evaluation, we need to wait for more time. Because weekly zones, maybe it may take a couple of weeks time. Several weeks, 2 weeks or 3 weeks sometimes. Then only we get the confirmation. Because weekly zones, new weekly zones won't be created immediately, right? If a weekly zone has to be expired, another weekly zone has to be created. For that, one leg out should be there, minimum one base candle should be there. Again, leg in, leg out after our current zone creation. So that means if everything happens quickly, minimum 3 weeks we have to. Maximum maybe 4 weeks or 5 weeks or 6 weeks. We don't know when the new weekly zone will be created again. And waiting those many days without completing our other training sessions is not practically possible. That's why I want everybody should focus on this particular video. Especially those who are looking for weekly income trade, monthly income trade reports also, probably you should try to understand what is going to happen in weekly or monthly also. Okay, hope you got the clarity. If you have any questions, please put them in the comment section. I will try to address. If more questions are there, I will try to make another training video. Not a problem. But definitely this video might have changed your perception, thinking perception. This video might have definitely will help you how you can extend your analysis by taking software generated reports as a reference. You take them as a reference and then you can extend your analysis. And this extension of this analysis you understand if you properly learn your concepts in phase 2 training. That is very, very important. Got it? Okay, hope this information will be useful to you. Let's all meet again in our next video. Thank you.